A lot of people out there that are receiving not so welcome letters from the Social Security Administration about their Medicare Part B and their Part D, their drug plan monthly premium. They're being charged extra for Part B and Part D, the prescription drug plan. And that is called Irma. And so we're going to talk about that today. This is the government. They got to have a long acronym about everything. So this is called the Income Related Monthly Adjustment Amount. And so we'll talk about what it is, how it's kind of calculated, can you appeal it, and some different situations. All right. So if you're new to my channel, my name is Ed Weir. I ran the third business Social Security office in the country. And in my semi-retirement, I'm helping y'all get everything you're entitled to from all things Social Security, Medicare, retirement, disability, Medicaid, all the rest of it. Make sure you subscribe and like and all that kind of good stuff so this information goes out to more people. Let's talk about that. All right. So I've done this a few 100,000 times. My office, one of the busiest in the country, and so we've had a lot of Irma. This is the Irma season. This is the time of the year when everybody gets these letters. And okay, so pretty much everybody pays for 2025. They pay $185 a month for their Part B premium. And when they sign up for the Part D, the drug plan, they pay whatever premium is, whatever plan they sign up with, whatever company. So that's the base, $185. But other people pay more than $185, extra $100, $200, $300, $400. It depends on that particular person's income. So that's how it's determined. This year, 2024, it's 103,000. Anything over 103,000 if you're single, 106,000 if you're married. For 2025, the numbers have gone up a little bit. For 2025, if you're single, you made over $106,000. This is 2 years ago. So this is 2 years ago, prior years. It's not this year, it's the last year. And you're saying, why is it 2 years ago? Well, this is December. And Social Security, Medicare has to, figure out your premium. They can't do it based on this year's earnings, this year income, because you haven't finished the year yet. You probably won't be able to do your, taxes until, February, March, April, May or something. And then it's too late and it'll be the following year. So that's why it's 2023 affects 2025's Part B premium. And so everybody is getting their letter about right now that says, okay, for 2025, your monthly Part B premium is going to be this amount. Okay. All right. So if it's over 106,000 for 2025, then you're going to get the extra premium. If it's over 212,000, if you're married, then the extra Part B and Part D premium. And so again, it's based on your magi, whatever people pronounce it differently. It's basically your adjusted gross income, and then it's a modified adjusted gross income. So how do you know what it is? You look on your income tax, your 1040, and there's two lines. The 1040, that's basically your AGI, and then 2A, which is basically tax exempt interest. So you add those together, and that's how you determine whether you're over the 106 or over the 212. And however much you're over that determines how much you're going to have to pay for the extra Part B premium predominantly. And this is only for 1 year. So in 2023, if you're single, you made $200,000, then your extra Part B premium will only be from January until December of 2025. And then for this year, if you made over that again this year, then it'll continue for the next year. So they look at it every single year. A lot of people mistake these with this extra Part B premium with the penalties. So if you sign up for Part B, but you do it late, you don't do it when you're supposed to, then you're penalized 10% for every 12 months you go over that time frame. So if you're 5 years old, 5 years over, then you have to pay a 50% penalty on top of the Part B penalty, on top of Part B premium. So that's a completely different thing. You don't have, this is also the season a lot of people are starting to retire starting January, and they're losing their health coverage from work. So if that's your case, if you're 70 years old and now you're going to stop working at the end of this year, and you're not going to have health insurance from your current work, yours or your spouse's, starting in January, then you have to sign up for Part B. If you're already receiving benefits, then usually if you're about to turn 65, your Part B they automatically sign you up for the Part A and the Part B. You can actually refuse Part B. Again, if you have insurance from current work, we're not talking COBRA or the Affordable Care Act or retirement plan. It's through current work, yours or your spouse's. If you have current work and your employer has 20 or more employees, then you are not penalized. You do not have to sign up for Part B. You do not have to waste your money on the $185. But if you don't, then you do. And that's where that extra penalty. Okay. The Irma is a completely separate beast. That is for the high wage earners, the extra premium. Congress started this many, many years ago to kind of help shore up Medicare. Because Medicare, just like Social Security, the trust fund is, it needs to be addressed, and this is the one of the ways they decided to address it. Okay, can you appeal that? Yes. If you receive that letter, on the bottom of the letter, it gives you a couple opportunities to appeal. You can do an SSA 561, which is a request for reconsideration, which for these, that really doesn't help. In order to get your premium adjusted back to the $185, you have to have what's called a life-changing event. And the life-changing event is, yes, back in 2023, I did make $200,000, $300,000, whatever the case may be, but I have since stopped working since that time. And that is a life-changing event. So you submit that. It's the SSA-44. Always have to have a form, right? SSA-44, you submit that and they will bring it back down. If you missed doing that when you were supposed to, if you don't get around to it, like, February, March, April, July, or whatever, and you submit that and they find, oh yeah, you do have a life-changing event, we should have never charged you over the $185, then they will stop charging you going forward, and they'll give you any money back that you paid over prior to that. So a life-changing event is that, again, you stop work or you got divorced, and so the other income is no longer in, that you lost a income producing property, the company that was providing you retirement went bankrupt, so you're not receiving retirement money anymore. There's just a few situations. And one of the things that Congress never made a carve out for, an allocation for, was sale of a home. So if you have a principal home, and I was reached out to a CPA today and said, hey, you're doing Irma, make sure you tell this. I usually don't give IRS type advice because I never worked at the IRS, but this gentleman is very trustworthy. So he says, if you have a principal home, you sell your principal home. If you're single, you don't have to pay taxes on that up to $250,000. If you're married, $500,000. So that doesn't even go into your 1040 line 11 or 2A or whatever. I think it's line 11 on that particular case. So anything over 250 or 500, that is considered capital gains, and then it will go in there. And people ask all the time, well, that was just a one-time thing. I'm not a high income wage earner. It just, we had the family home, we raised the kids, and now we want to downsize. So we sold it. Sure, we made a lot of money, but it was only one time. Can I appeal that? Yes, you can appeal. Will you win? No, unfortunately. Congress did not make that consideration. They should have said, hey, a one-time sale of a home doesn't trigger the extra Part B premium, but they didn't. So unfortunately, we're stuck. And the Social Security employees that get the SSA 44, they're stuck too. If it's so my CPA friend said if it's not a principal home, if it's like a second home or something like that, then there is no exclusion or anything like that. So it's the full capital gains. So I got another email yesterday from someone asking that, well, they had to take some money out of their 401k and that was only a one-time thing. Yes, unfortunately, that also triggers the extra Part B premium. But remember, it's only for 1 year, but hey, an extra $100, a month for 12 months, that's $1,200. I know that's no consolation that it's only for 1 year, but it is only for 1 year. So get with your, in terms of the details, what goes in line 11 or what goes in line 2A, municipal bonds, tax exempt, all those type of things. I try to stay in my lane. I wish a lot of social media people out there would stay in their lane and stop talking about Social Security if they know nothing about Social Security. I know nothing about the IRS. I've been trying to cancel my subscription to the IRS for decades, and so I will take my IRS advice with a grain of salt. Reach out to your financial expert on that and what should go in line 11 or line 2A. All right. So yeah, in terms of if you're going to file for the and another thing is one thing I've seen sometimes people get, they say we sold a home and we were working, and that together put us over. But the sale of a home was only about 100,000, and then we stopped working. So that's a life-changing event to stop working. So if you add those two together, the sale of a home and working, that puts you over. And you're like, what Ed said, you can't file an appeal for the home. Yeah, but you stopped working, so maybe the work thing will put you under the cap there, so they can go ahead and do it. So as I say with anything federal government, anything Social Security, if you think you are in that gray area, please file a reconsideration, an appeal, file a claim, because there's exceptions, the exceptions, the exceptions. And that's essentially why I'm doing these videos all the time.